good afternoon. You're watching Closing Trades on ET Now. I'm Anisha Jain. With me is Nikunj Dalmia. It's the day of the monthly options expiry and we're holding up. It's not too bad a picture, but if you look at where we started, we are exactly that at that level. All the jagged edges you can completely, neutralize, given the fact we're just around that 17,020 mark when we started, and that is where we are at the moment as well. Having said that, the outperformance today is coming in from the broader markets. Look at the small cap index up around 1.3%, the mid cap index too showing a gain of around 1%. Separately speaking, if you are looking at the other data points that you need to track for the expiry, there's a lot happening with respect to sectoral data as well. PSU banks and autos are leading from the front today. Autos, of course, ahead of the monthly data, which is expected, are quite excited, and the PSU banking names are also doing their bit. HDFC Twins, SBI, these are the ones which are pulling the Nifty higher, while on the downside, it's Reliance, which is putting a bit of a pressure on the market because it's 1% down. But despite all of that, it's perhaps the fourth month of decline that we are staring at. It's the first time it will happen in 2 decades that we'll be seeing fourth month on a decline. But yes, a couple of trading sessions, not even a couple, just one left, right? Friday for March to end. We have just 1 day to recover almost 3%. Yes. So we only have 1 day to recover that 2-3% cut that we are seeing on a month-to-date basis. Otherwise, it will be the first time in 2 decades that we'll have 4 months on a decline, on a trot.
And the 4 months of decline which have happened in last 20 years, that's because of a reason. That's because of a global terrorist attack episode which happened in 2001. So you'll have to take the clock all the way back to 2001, then look at the data, and that's what we've done for our viewers, that for the first time in this century, Nifty is on course to go down for 4 months on the trot now. Now, to give you a backdrop here, the problem is with US banks. The problem is with European banks. There's no problem with Indian banks, but Indian banks are underperforming. Amazon, Meta, you got Google and stroke Alphabet who are laying off. Indian IT companies are still hiring, but Indian IT stocks are down. Foreign institutional investors are not sellers in the month of March. That's what data is telling us. They've been net buyers. So FIs are buying, DIs are buying. And the problem is global in nature, but Indian markets is underperforming. So this is quite ironical if I really look at the market right now. I smack of low participation, low volumes, and some compulsions, maybe at PMS, HNI interest is waning down, volumes are waning away. All that is really having an impact per se on the market. But today for a change, Nuresh, we are holding above 17,000. The ring of this number, Nuresh, 17,000 ke upar hai, is a good ring to have.
Yeah, so at least we are above 17,000 is the way to look at it. But if we look at the bank Nifty, it is sustaining well above the 39,500 mark. And what we are seeing is global indices also have recovered quite a bit, almost 3 to 4%, 5% from the lows. So today we have expiry pressure that could continue, but hopefully all this augurs well for a better April month and the whole year going forward.
What's your take? Where is the expiry going to be? Because over the last couple of trading sessions, we have seen that last 30-minute, 45-minute move come by today. Do you expect the rally to sustain?
Yeah, is it for me?
Yes, Vinay, for you.
Yeah. So I am expecting that Nifty should close between 16,950 to 17,000 mark, and we see a strong support around 16,900. And Nifty has been consolidating for last 4 consecutive sessions, and it is into a range of 17,100 on the upside and 16,900 on the downside. So we have seen some profit booking in last 15 minutes. Again, it is going down. So overall trend is still down unless and until Nifty closes above 17,200. We are cautious. But no doubt today breadth is going very positive, and that is a good sign, and global market support is also there. So some sort of confidence is coming in stock specific bullish trades. So yes, we see some strength in the stocks and breadth of the market, and unless 16,900 is breached, one should remain optimistic and one should take stock specific long trades. So there are many stocks and sectors which are outperforming, so we should concentrate stock specific right now.
Sagal, good afternoon. It's so good to have you back. You're not smiling or you're not looking happy today. It's okay, sir. It's okay. Markets will recover one day.
Meeting you, I'm always happy. I may not smile. But markets will. I have the least doubt markets will rebound. It's only a question of time. last 2 years, nearly 19 months actually, since October 2021, we have seen the markets go down one way. You have seen the small cap index correct by as much as 15%, mid caps are about flat, large caps are flat. But then if you look at the constituents, there are many stocks which are down 30-50% in this period. Now, I mean, if there is a sale in a shirt shop, people run and go and buy shirts. But if there is a sale in the markets, the fear is that this sale will become dearer. And so they will stay back till there is further correction in prices. And markets will never tell you that this is the bottom. So clearly, when markets give you this opportunity, one should build portfolios. We believe that this is such a time where one should be building portfolios for the next year and the year after that.
Okay. Anshul, the problem is with US banks. The problem is with US big tech. S&P in the month of March, which was supposed to be a tumultuous week because of US banking issues, CSFB and UBS, S&P and European markets are up, Indian markets are down. So the problem is in the world and we are falling. How ironical is that? I thought India was supposed to be the bright spot.
And Nikunj, that's right. Although if you look at last year per se, there was material outperformance that India saw. Some of that outperformance is being given away in recent months. And it is good only for the health of the market that this differential in valuation, where India had become far more expensive in terms of valuations versus other markets, that differential has come off. That gives us comfort that the times ahead will be better for India as compared to the recent past. Also, I mean, some quality names I can tell you, Nikunj, that I'm spoiled for choice. Quality names have corrected meaningfully, where growth perception, growth expectation hasn't waned. And earnings visibility is definitely there. In such names, valuations have corrected, which gives us opportunity. And so, in fact, this uncertainty should be, should make people happy rather than anxious, because in this uncertainty, prices are becoming favorable. This is not risk, this is uncertainty. And that differentiation should be made.
Example, what is risk, what is uncertainty? If you buy uncertainty, you always get bargains. What are you buying? Where are you buying uncertainty?
We are not restricting ourselves to one sector or the other, but I should tell you that in terms of earnings visibility, we are seeing that play out in the financial space, in capital goods. We believe that in select autos, we are finding opportunities. We are also finding opportunity in defense. Some of the defense names which have become overly expensive are now at relatively reasonable valuations. So across the board, even IT for that matter, the mid and small cap space in IT, that's corrected like there's no tomorrow, and that's giving us opportunities. So across the board, on a stock specific basis, we are finding opportunity. And just I'll take 10 seconds more. The kind of framework that we follow and which has helped us over the years is that in times of uncertainty, don't worry about the frequency, worry about the magnitude, which means that in near term, you'll see the prices stay in a range, go down a little bit. But if the magnitude of the upside is substantial over a 2-3 year period, then focus on that. And rarely, if ever, you'll go wrong in such a framework.
Okay, let's see. So there are a lot of opportunities, and Anshul definitely spoiled for choices. But today there are a lot of stocks which are buzzing around on news flow as well. Let's take a look at Adani Group of companies because they seem to have recovered substantially. So whether it's Adani Enterprises, Adani Ports, or a couple of other names as well from the Adani Group, they are doing well. And that's because the company has issued a clarification that they have repaid some of the debt as well as the pledge holding has been brought down. So some of these counters are on our radar. Z Entertainment too was up around 4%. Remember, this is something that we already expected, but now there is an official statement coming in from Z that they've entered into a settlement with IndusInd Bank. They are looking at settling all the disputes and claim they haven't paid any penalty, and they are expecting no material impact as far as the P&L is concerned of the company at this point of time. So 3.5% gain coming in there. IRB infrastructure is up 6%. There's an 18% hike which has happened in the Mumbai-Pune Expressway tollway from April 1st, and perhaps the street is building that into the numbers as well. So IRB infrastructure up around 5.5%. Nuresh, wanted your take regarding a couple of these counters, whether the Adani Group, Z, IRB. Are you looking at anything which becomes a good, interesting buying opportunity?
So would be waiting out for a little more price action to confirm that. So Z has come up on the radar. The stock is back above that 215 mark. But if it can sustain above the 220-25 mark, which was the last time where it topped out at and saw a big correction, then it would be a longer term trend change. So the stock is on radar because purely the bounce back has been sharp. IRB infra is something which not really interested in. The stocks of pull up on the bonus split. But the sector looks interesting. There is a Ahluwalia projects which looks interesting in the sector. There is a NCC which looks interesting in the sector.
Names which are actually buzzing from this infrastructure quasi-realty space is Macrotech Developers, which is good at 9% up today, and NBCC2 is up around 7.5%. Vinay, a word on these two names?
Yeah, so Lodha, the micro developers have seen a healthy correction. We saw that on 3rd of March, the high was 1087 and yesterday's low was 7777. So healthy correction we have seen, and now today it has gone up 9% with a rising volume. So definitely there is a chance because infrastructure and real estate stocks have been witnessing some short covering, and I think it could continue. Stock specific market looks good, and not for the positional basis, but at least for 2-3 days we can expect some extension of the pullback in stock like Lodha Developers. So it is currently quoting at 855, and we can expect it to move towards the next resistance of 925, which is immediate target I can see. So 925 is the next resistance. Volatility is very high, so that's why I'm giving the level which is far from here, and the support should also be kept at around 850 or not 810 should be the stop loss in the Lodha Developer. So yes, pattern is good and chances of extension in pullback is higher in Lodha Developers.
The breadth is looking good for a change. It's really looking good for a change. Now, what's standing out? Just look at Paytm. From the recent low, up more than 30%. The recent low was below 500. Today, it may be having a day out, but otherwise, Paytm from the recent low has done well. From the all-time high, you got to be kidding me if I say that it's anywhere close to its all-time high. But when large anchor investors actually exited Paytm, 450, 460, 500, the stock actually bottomed out. Flip it around with Zomato, 150, 160 I think was an all-time high. It's languishing at 50, but this is one stock in last 52 weeks has given no change. Nykaa on the other hand got completely smashed. This was one company which had a promise of cash free flow. It was generating free cash flows, but if you adjust the bonus part as well, the stock has just got knocked out. But Policy Bazaar is the one which, frankly, if you ask me, is the one which has done rather well from its recent low. They're talking about profit, they're talking about growth, they're talking about 1,000 crore of PAT by 2027. So this is one stock which in a sense is completely, it has come up like a phoenix, so to speak, from the ashes. Very strong movement in policy fintech, 52-week change just down 15%. Anshul, where are you shopping in this space? I mean, are you shopping at all, and if yes, where?
We have, Nikunj, stayed away from this space all through this time. And there is a reason for that, which is that we are cash flow buyers. We are not buying in the hope that someone will buy from us at a higher price tomorrow. In this space, that excitement was more as compared to the cash flows that these companies were generating. For that reason, we stayed away. Even today, if you ask me, this is a space which is a play on liquidity easing globally. Only then will this space get some succor, some support at the bottom. And so even for now, we will stay away. At some point in the future, maybe when we get a better hang of what's happening at the macro level, we will look at this space. But for now, we are on the sidelines.
Sidelines still when it comes to some of these new age tech companies. Taking a short break with the news that markets have ebbed a tad bit. 17,000 is where we are at. Suzlon Energy, Praj Industries, Garden Reach, Raymond, These are the counters which have suddenly spiked and are all up anywhere between 6 to 10%, and even Home First Finance is suddenly showing quite a bit of price volume action. We'll do one thing, we'll step into a very short break, but don't go anywhere. There's lots to track when we come back. Okay, so the market is holding up well above 17,000, so that's the good news. But remember, it's going to be fourth consecutive month of negative expiry after 2 decades. What does it mean for traders, and what should we expect in April series? My colleague Sharad has done some analysis. He's joining us with more on that. Hi, Sharad.
Well, yes, a very eventful series in the month of March. We are seeing Nifty itself give a downturn returns of almost 3%, while for Nifty Bank itself, it has been largely flat but trending with a negative bias. Now, looking at this, this will be the fourth back-to-back month where the expiry will be coming in the negative. This applies for the Nifty cash market, and if the levels of 16,800 comes down, then the next major support would be 15,500. But what makes this expiry very interesting is an anomaly has happened, and this has happened first time in at least the last 2 decades. This is the first time for the 4th straight month you'll be actually seeing Nifty coming in the negative returns, and this is actually for the cash market. We did have a poll as well, and over here majority of the traders, they are actually stating that the Nifty range is expected to come between 17,000 to 17,200, while for the Nifty Bank itself, they are bullish between the ranges between 39,500 to 39,800. But apart from this, what the rollover data is suggesting, of course, Nifty is having a 61% rollover, while for Nifty Bank, it's on the higher side at 74%. Looking at the sectors where there is a positive rollover, it includes cement, FMCG and the pharma pack, while on the negative side, we have IT, metal, energy and the banking stocks. Apart from this also, let's looking at the stocks, the highest rollover comes in for Berger Paints, Chola Finance, Jubilant Foodworks and Shree Cement, while on the lower rollover side, we have companies such as Oberoi, Realty, Atul, GMR Infra and Motherson Sumi.
Session with Vash Srivastav, we got Anshul and our good old Nuresh Mirani. But I'm going to go back to the market mood right now, and the market incrementally seems to be moving higher in terms of the trajectory what it seems to be following. Anshul, what is the update with the PMS schemes in terms of the inflows and outflows? I mean, they suddenly are being called as the stepmotherly, they are called as the folks who are giving this market a stepmotherly treatment, because mutual funds are saying we are buying every day. You can look at the figure. FIs are saying that we've stopped selling. It is the PMS guys who are selling every day. Is it true?
What happens, Nikunj, in the PMS space is that you're well aware that this is a managed account structure. So each client sees not only the NAV, but also stocks that the client is holding. And for that reason, the involvement is much greater and on a much day-to-day basis in the PMS business. And in times like this, when you have had a large bout of volatility, and many of the stocks which were trading at 30-40% higher than current prices, those have come off a little bit over the last, say, 15 to 18 months. These clients get a little nervous. And as a result, one sees that nervousness reflects in flows. And this is the nature of this business. You will see that when the markets are doing well, these PMSs will again start buying because flows are great and they will push the markets up. And when markets are kind of iffy as they are today, because of this tendency of the investor, PMSs will also sell. Having said that, I must say that at this time in the market, if you look at the DII cash data, they are sitting at nearly, I think, a decadal high, if not more, at 6% cash on aggregate. In addition, if you look at FII short positions in the market, those are also at a significant high, even higher than June of last year, where shorts had peaked. Now, this is a setup which tells you that this is probably an oversold market. Of course, the joker in the pack is the macro globally, where you don't know how the banking system globally is going to move. There is some amount of assuaging of fears by backstopping by the Fed. But if there is a credit event globally, then of course one could see downsides. Other than that, much of the downsides are already in the price as positions both at the FII end as also the DII end shows.
The technical view as well. Rohit, hi, thank you so much for joining us. You have turned constructive on the market, but still it continues to be very, very sideways, and we are perhaps staring at a fourth month of consecutive decline. What do you think April will hold for us?
I think this should be the last and final month of negativity, and you were making that analogy sometime back about 4-month declines. I think that's a very important one. You actually can go all the way back if you want really 4 consecutive. You have to go all the way back to 2001. The 9/11 crash was preceded by a 4-month decline. In fact, that was the 4th month, and what it was followed by is a multi-month advance. So the history of 4-month declines is pretty big. I think if you want a even larger time horizon, you'll have to go all the way back to the Pokhran bomb case, where in 1997-98 you had a almost 5-month decline from June into November, December. So those have all been reversed pretty meaningfully each time. In fact, that one was reversed with a continuation of the Y2K bull market. And so I think you're coming to the end of this. Not only that, I think seasonally, the March month has been an interesting one because markets, declined for the last few months into the month of March. We've often seen meaningful bottoms in the month of March, including March 2020. You can go all the way back to March 2009. They were all significant lows that were made in the market. So, and time-wise, from the high that we made in October 2021, we are 18 months into this bear market. Although it's not been downwards, it has been, in terms of index, it's been sideways, but a lot of stocks have seen significant retracements and declines also in this phase, which I think even time-wise should be coming to an end. So my sense is that the last month, you're going to kick off into a multi-month, advance from here. The rest of 2023 should be mostly bullish. That's a pretty strong view that I'm taking.
Questions there, Rohit. If we are going to be in multi-month uptrend, where do you see the year end likely to be? And secondly, which are the sectors or segments do you think which will drive the growth? Is it going to be banking, autos, any other beaten down sector that you are watching out for?
So we stick with the strength. I mean, we've seen strength in places like defense. We know that capital goods, for example, as a sector, is getting a lot of government support, and that should do well. These are actually the outperforming sectors.
Come back to you. I think we are getting some echoes and technical glitch as well. But in the meantime, for the market, 17,016 is where we are holding at. But Anshul, your take as far as the auto stocks are concerned, and this is a question we have been discussing and debating as well. Which are the stocks do you think which will outperform this year from the auto space? M&M, Tata Motors, Maruti, which is the one that you think will be the strongest leader of sorts?
We would focus on passenger vehicles and commercial vehicles. We think that in commercial vehicles, particularly, the cycle is absolutely robust. And this is typically a 3 to 4 year cycle, which started sometime in 22. So could go on till 25, 26. And as a result, when you see volumes pick up, you will see margins also expand. What we saw as a result of COVID is that smaller trucks, smaller commercial vehicles were getting sold. Buses, volumes of those came down, and heavy commercial vehicles, those also came down in volumes. Now, if this cycle progresses as we anticipate it will, then these segments will start doing well, and those are margin accretive because those are higher ASP products, average selling price products. So our assessment is that the cycle is strong, so volumes should do well. And within that, the mix should change favorably in this space, which should aid margins. And the street is not expecting that because that doesn't reflect in multiples. So this is a space that we like in the autos category as a whole.
I think we have patched that line with Rohit as well. Rohit, just quickly wanted your take with respect to the sectors you were saying is likely to outperform. So apart from defense, you said, which are the other ones?
Yeah, so capital goods, which has been supported with government measures, I think that's one in terms of even the capital goods index has been one of the outperforming sectors of this time period. So I think you stick with that. I would also, in the beaten down names, look at metals, because I think metals is in a long-term upward cycle. We have seen a significant pullback in the metal stocks. But going ahead, I think they should pick up as well, because if you simply look at metal prices globally, copper prices have significantly moved back high. Almost 60-80% of the losses they'd made have been recovered. And that, I think, is a signal. In fact, one of the key drivers for commodity prices is the dollar itself, and the dollar index peaked in September of last year. So I think the commodity cycle is slowly coming back. The last part of the commodity cycle was oil prices, which did fall back to around $64 on WTI. And I think that should also have bottomed out. So broadly speaking, I think the commodity related stocks should join the up move, and that's where I would look for bottom fishing.
Very philosophical question here, and just Anisha and me were talking about it when we were preparing for the show. What we've done is that we've taken the clock back. Pardon me if I'm being selective here, but we've gone back to January 2020, when the world did not have a COVID problem, right? And today COVID technically is over. And you look at what the market return are from 1st of Jan 2020, the market has given a CAGR return of 12%. Now my point is, Anshul, we've digested a extraordinary volatility, a bout of COVID, extraordinary low interest rates, extraordinary spike in inflation, but ultimately, despite this 3-year mega up and down, peak and turf kind of a cycle, equity market have only given you returns which are in term with long-term averages.
I couldn't agree with you more, Nikunj, and this goes back to the point that I was making earlier regarding differentiation between risk and uncertainty. Now, if you look at the period of COVID, you saw global plays, even Indian plays, which were going to survive in that environment, do very well in terms of their stock prices. Companies like companies in the space of restaurants, movie theaters, travel and tourism, those were in the dumps. Now, the expectation was that this is not uncertainty, this is risk, the world is coming to an end. But if the belief of an investor was that this is a time where, of course, there is uncertainty because of what's happening around us, but this is temporary, and that this too shall pass. It is a dot in the larger picture that the world, in the continuum of the world. Then these businesses where one wants to travel as a human being, one wants to travel, one wants to mingle with other people, wants to go to movies, all of those will come back. Then one could have played that uncertainty and made the distinction between risk and uncertainty. Markets over the long term are driven by human, expectation, hope of growth, etc. And if one has belief in that, then, and one is optimistic by nature, then there is no better asset class to be invested in for the long term than equities. So and we, whenever we speak with clients, we always tell them that we are believers, and we are steadfast believers that this is the asset class to back and invest in for the long term.
We'll slip into a very short break at the moment with the news that the market is very close to the highest point of the trading session. We have a 110-point uptick on the Nifty. On that note, we'll thank Rohit as well. Thank you so much for making time and speaking with us on the day of the monthly options expiry. And for now, the picture seems to be pretty. And the 3 p.m. move which we're witnessing at this point is at least on the upside. So there is no sell-off which is happening. In fact, a big spike as far as Nifty is concerned. Let's quickly pull up the Nifty Bank as well before we slip into that short break. Is the move coming in from Nifty Bank? Yes, that too is high by around 300 points. Taking that short break and we'll be right back. Welcome back. Well, the markets are looking quite sturdy at this point of time, 17,070. So that 3 p.m. move is definitely on the upside. Let's welcome on board Rahul Sharma as well as Anand Tandon to talk to us about the last 30 minutes of the trading session and how it's likely to pan out. Rahul, hi, thank you so much for making time and speaking with us. A big, surge is what we're witnessing in the last 5 to 10 minutes. Where will it end, you believe?
Yeah, at least for the day, it's a green after many long days. But technically speaking, the silver lining is 16915 is where we formed like a triple bottom. I think today also we almost tested that area, and finally Nifty is giving some hope on the upside. Now, the silver lining is we are closing above the 17,000 mark in terms of the expiry. And at the same time, we have been pretty oversold for many sessions now. So the room for 17,500 to 17,600 kind of a move is pretty much there. So in the short term, I think the bias remains positive on the Nifty as well as the banking index, which is Bank Nifty. Both of the indices look pretty good. Obviously, the rollover numbers will put a lot of light as to what kind of activity has actually carried into the new series. But historically speaking, last 20-25 years of history, not many times Nifty has given negative returns for more than 4 months. So we are optimistic for the month of April series, and 16,800 is where the base has been for the March series. So as long as 16,800 does not get decisively broken, I think there is a very strong case for a short covering rally, which can take us to 17,500, 17,600.
What a surge in some of the PSU banks. Hello. Markets were very bullish on them, then they got very bearish, and today it's the day when some of the PSU banks are doing exactly what they've done for 2021 and 22, outperformance. Naresh, how serious is today's green on the screen for PSU banks? New trend, or they say 4 दिन की चांदनी फिर अंधेरी रात?
I would say it is just the start of it. So if you look at the largest one, just Axis Bank, SBI Bank, State Bank of India, the low made was the whole Adani debacle happened. The stock made a low of 500. The low made 3 days back was closer to 500, 505. The low made in August of last year was around 500, 510. And the stock is at the same price where it was in September 2021. So the stock has done nothing in the near term. And now the risk reward still looks very interesting for the whole PSU banks. But I would still prefer SBI, Bank of Baroda and Canara Bank and not venture into the smaller names. So SBI at these prices looks very interesting, down from a high of 620, a good 20% correction done from the top, and a base made. Your stop loss at 500. The risk reward is super, wherein you have a minimum target price of 560 to 600. So the risk reward still looks very promising for SBI.
Your take as far as where we are in the market, if there is any stock which is catching your attention that becomes a good buy, which is showing a lot of momentum, because definitely it's a 125-point move on the Nifty.
Yeah, so sustainable rally can be seen in the PSU banks. We have been discussing about it, and PSU bank index itself has taken a support at its 200 days exponential moving average and bounced back. And if you were to look at the constituents of PSU banks, almost all PSU banks were holding above that 200 days moving average when market was going down, and many stocks, in fact, more than 70% stocks were below the 200 DMA. But PSU banking stocks were only barring a couple of stocks. Most of the PSU bank stocks were holding above their 200 days moving average. So it gives me an impression that whenever the market recovers, the first sector which can perform and outperform the entire sectoral indices is the PSU banks, which can give you a sustainable rally. So I think the more focus should be given to the PSU banks. I think Bank of Baroda, Bank of India, and even small banks like UCO Bank can perform here, and they can sustain this rally. So this is not a pullback, but I think this is a pure reversal in the PSU banks, and this should be given a priority, and sustainable returns can be taken from here as far as trading is concerned.
Good afternoon. How are you, Anand? Long time.
Yes, I'm good. Thank you for having me.
I was looking at data in the month of March. What was the headline? A problem with a US regional bank, or problem with US regional banks. Credit Suisse and UBS issue in Europe. But S&P and European markets for the month of March are flat, whereas Indian markets are underperforming. Why are Indian markets underperforming? Global macro challenges. So the problem is outside India. Why is India underperforming?
it's not as if we are not running to the rest of the world. We haven't done as badly. If you see, for example, look at the fall that we saw in the major headline indices for example, the IT sector. What has happened globally and what has happened in India. Similarly, for even the Nifty, I think most of the other markets have corrected far more and are valued far less expensively than India is. And typically one would argue that as an emerging market will grow very fast. The reality is that you're not going to be anything great compared to many of the other regional emerging markets. So you're more expensive. You are not particularly growing at a much higher rate in terms of earnings growth, at least compared to your peer group in the emerging market. And you have already a situation where, for example, the rupee for some time was outperforming. So therefore, if you are a foreign investor, you would be taking money off, and which is pretty much what we have seen. How far that will continue is anybody's guess, but the reality is that the Indian market is as linked as anybody else, as any other market, to the global markets. And to the extent that we had very, very strong outperformance and overvaluation on a relative basis, what you're seeing is just a correction. So I don't think that one should read too much in the underperformance for the near term.
To take a look at the market, look at the surge that we are witnessing at this point of time, 17,100. So if you look at from the lowest point of the trading session, we are 150 points high, because at one point of time we were what, 16,950 thereabouts. So big recoveries what is underway. Rahul, your take in case if there is any select stocks that you would want to talk, maybe from the cement space, ACC, Ambuja, Ultratech, anything that catches your attention?
Yeah, so two sectors clearly have stood resilient in this entire period of volatility. One is cement, another is capital goods. From the cement pack, I think Ultratech Cement, which is the sector leader, is technically very robust, sustaining above all its short-term moving averages. In fact, today we've seen a breakout happening in the stock, which opens up gates until 7,900, 7,950. So I think this is one stock which looks set for a good momentum move in the early part of April series, and positionally we are pretty optimistic on this. Traders can look to buy the 7,600 call options trading around 190 odd. Have a stop loss placed at 150. I think this option can give targets until 275, 300 on the upside. So look to buy call options on Ultratech Cement. I think the entire pack should do well, but Ultratech in specific is one of our top picks in terms of the setup.
HCL, suddenly that stock is up 2% and it's putting the highest weight on the backside for the Nifty as well. NHPC is up a solid 8% in the last few minutes. So a lot of these broader market names also, like the likes of Cochin Shipyard, which suddenly spiked as much as 10%. Garden Reach is up a good 9%. Of course, the PSU banking names, UCO, Bank of India, IOB, we have been highlighting. Sri Renuka Sugar. So suddenly there's like fire under a lot of these stocks, and even NHPC for that instance, apart from SJVN, is up a good 7%. But Anand, your take as far as the entire power sector is concerned, because whether it's a JSW Energy, Torrent Power, they're all coming back on investors' radar. Would it be a meaningful sector to look at from an investment point of view?
Well, certainly, I think some of the power companies are trading relatively cheap. I would specifically mention, for example, CESC, which looks very, very cheap relative to even the rest of the sector. And there is no question that after many years, we are now seeing a very robust growth in energy demand. And with that, therefore, you would expect to see those.
Connect that line with you, got you on a patchy line, but in the meantime, Vinay, wanted your take regarding HUL and a couple of these power stocks, SJVN, NHPC, JSW Energy.
Yeah, so NHPC, I think some sort of adjustment is going on, but previously till yesterday there was no setup technically, but suddenly some stocks have been moving from the downtrend to sudden 8 to 10% up move. So there is no setup. Very few sectors are giving convincing movement. I would suggest that the sector which has been outperforming, we should stick to that. I think PSU banking, some private banks also, and cement sector, this particular sector can perform very well, and we have the good trading setup there. So I think more concentration and more focus should be on the PSU banks, cement stocks, and some of the private sector and infrastructure stocks are also doing good. So I think one should avoid a setup like NHPC and many of the stocks which are bouncing from the low. If we sustain, if those stocks sustains, then we will review. But as of now, I would suggest that these sectors can outperform cement, PSU banks, as well as infrastructure.
A surge, guys. I mean, 4 month of weekly decline. Markets hit a 5 month low and then have recovered. We have fallen 2.5% for the series. I don't think a 3% surge is going to come on Friday. If it does, I'll be pleasantly surprised. But it's a good day to go back and enjoy the holiday with a little bit of smile and with a little bit of optimism on the screen. Naresh Mirani has decided that now that markets have gone up, he's going to take his Thursday holiday very seriously and very lightly. So, Naresh, what is the plan?
The plan is to go out with the kids.
That's a good plan to have, actually. Anand stopped doing that in a while ago. Right, Anand?
I think Rahul is all smiles. Rahul, what are your plans that suddenly got you all smiles? Thursday, big plans?
We take a holiday or not, definitely bears have taken a holiday at least for today. So I think that is why I'm smiling.
अरे राहुल भाई हर चीज स्टॉक मार्केट नहीं होती है.
True that, it all revolves around the bulls and the bears. But on a lighter note, it's good to have a break midweek, and I think next week also we have a holiday coming up, so 2 truncated weeks back to back.
Anand, I'd like to draw your attention to Adani group of stocks. There's a new buyer in the town and a big buyer in the town. A lot of leveraging issues now are behind them. Independently, you have to analyze the business now, just the business. Forget what the world is opinionating about them. Independently, as an investor, would you buy into these businesses?
So I think there are some very marquee business, in particular Adani Port. I think that has got enormous potential and enormous value in the company, and the way that the area around the port, etc., is being developed, it will become a fairly massive industrial park and so on. So I think that is the one company in the group which I think it should be bought every time there is a shock downwards. For most of the other companies, unfortunately, it is still very expensive, at least from on my parameters. So you are still looking at very expensive numbers, whether it is the power or the transmission and so on. So while the assets are good, and to the extent that the leverage on the promoter side is reducing, more importantly, the assets will continue to generate cash flow. So I don't see a problem from either the banking perspective or any of that. The promoter issues are separate, and that can affect stock prices. But the assets themselves, I think most of them are marquee assets. Valuations, as I said, for those 2 particular areas are not something I'm comfortable with. So if you are looking at the group, obviously the cement assets are something which can be sold off even today in a flash. The port is undeniably the jewel in the crown.
Coming in, gentlemen, let me throw a rapid fire at you and figure out where we are and what are the stocks which are likely to outperform. Naresh, if I had to ask you to give one top bet at this point of time, one select stock apart from GE Shipping and L&T, what would that be?
That would be SBI.
Okay. What about you, Vinay? What's the top stock recommendation you would want to give?
I will go for the Bank of Baroda, which is trading around 164. So trading stop loss can be kept at 160, and on the upside, we can expect 170 in couple of sessions. So I would go for Bank of Baroda.
Rahul, what about you? Apart from Ultratech Cement, is there any stock where you see a meaningful upside, high conviction buy?
Yeah, I think ABB is one setup which is quite promising. 3,500 is very much on the cards. Can be traded long with the stop loss placed at 50 points lower than the current market price.
What about you? What is the top stock recommendation coming from your end? Mid cap, large cap, any sector as a blank check? Anand?
Sorry, I didn't get the question. Could you repeat?
I'm asking you one top stock recommendation. If you had to give, what would that be?
That's a little difficult for me to answer because it depends on the context in which you are really looking at.
Rest of the
But
year,
I would argue that given...
Okay, let me narrow it down. For the rest of the year 2023, if you had to make a bet on one counter to give you the maximum upside, what would that be?
So I really don't have an answer for that because that's not the way I operate. The simple question is that what is the scenario you're looking at? If you assume, for example, that you have a peaked out interest rate, and that you are therefore in a position where you can go from here in terms of either flat or lower interest rates, then every company which is an asset owning company is a great business. So you could look at all stocks which are benefiting from asset inflation. So it could be, for example, if you are looking at the farms, it could be fertilizer companies. If you are looking at infrastructure, it could be asset owning companies like IRB. If you're looking at banks themselves, I would argue that you want to look at those which have the best franchises and which have underperformed relatively. So I would go back to an HDFC or an Axis Bank. So it's really a portfolio approach. It's not so easy to say this one will do. It's not a toss of a coin.
For an easy answer, but clearly, of course, it's not that easy, right? But 160-point rally is what we are staring at the moment. Rahul, what about the auto space? If you had to pick up a stock from that, entire universe, what would that be? M&M, Tata Motors, Maruti, or even Eicher, Bajaj Auto? They're coming back on everyone's radar.
Taken quite a beating, especially in the month of March, and I think a good rebound is very much on the cards. Maruti is something that we like. I think there is, a good base that has been formed in the stock around the 8250, 8300 mark. So I think a bounce back should see us testing the 8500 zone once again. It's purely, oversold stock, markets rebounding. I think short covering can take us there. One can trade long with, either a stop loss place at 8200 or maybe look at the 8400 call options for the April series purely to trade on this bounce back.
Do you have a view on Reliance, Anand?
Well, Reliance looks interestingly poised, strong underperformance for a long period of time. Most of the sectors are doing reasonably well. I personally believe that energy prices are not going to collapse anytime soon. In fact, may actually move up from here, which will benefit their petchem business. The telecom is already doing very well. ARPUs are going up consistently, as you may have seen from your telephone budgets. And the retail, they are pushing further more and more. So in all, the valuations are, come back, at least for the new age businesses, have come down to the level at which they did the placements. Whereas for the rest of the companies, I think from here we are looking at significant upside. So I would, be fairly positive towards Reliance.
But the market is something which is really, really interesting at this point of time. Bank Nifty above the mark of 40,000. So let me pose another rapid fire of sorts to you, gentlemen. Nuresh, 17,500. Do you see that happening in the April series? And maybe what, 42,000 on Bank Nifty?
I would go with 17,600 and 41,000 on the Bank Nifty.
Vinay, do you agree?
Yeah, I agree. 17,400 to 500 I am expecting in the April.
Rahul, what about you, and what about Bank Nifty as well as Nifty?
Yeah, I think speaking of Bank Nifty, 41,200 is 41,200, 41,400 is where I think the Bank Nifty should flare up to. Clearly, it has been the sector leader and it has, market leader and taken leadership. As far as Nifty is concerned, I think there is a gap that is there on the daily charts which can be filled, which should be filled, I think, somewhere around the 17,600 mark. So 7,600 on the Nifty and 41,400 on the Bank Nifty.
If you had to take one bet from the private banking universe, what would that be? Because a lot is aligning well, whether it's ICICI, Kotak, HDFC, they were pretty sideways. Which one do you think will likely lead the rally from the private banking space, Anand?
Well, I think, as I said, the strongest liability franchise is what I would look at. So HDFC, which has been an underperformer, is a good candidate. But if you are not looking for issues with mergers and so on, then I would argue Axis Bank is reasonably well positioned.
Okay, so HDFC Bank and Axis Bank, these are the two top recommendations coming in. We'll thank you, gentlemen. But just before that, let me come to Nuresh and ask his BTSC ideas because we haven't done that. Nuresh, what's your BTSC idea?
So that would be a buy on both banks again. That would be a buy on SBI as well as an Axis Bank, expecting a move towards 530 to 540 on SBI with a stop loss at 507. Axis Bank with a target of 860, stop loss at 826.
Okay, thank you Nuresh, Vinay, Rahul as well as Anand for joining us and talking to us about this monthly options expiry. Very interesting indeed at the highest point of the trading session. Not only we scaled the mark of 17,100 but we are comfortably above that. So 1% gain coming in for the Nifty. The Sensex is past the level of 58,100. The Bank Nifty is also shining in the trading session, 40,000 and above as far as that is concerned. And the market breadth is very, very surprising and positive. So the small cap index is eking out a gain of 1.8%, mid cap index up 1.6%, and look at the market breadth, 1,500 stocks advancing to almost 600 stocks declining. Sectorally speaking, all the sectors ended in the green, but if you had to pick an outperformer, it is the PSU banking index, up a solid 3%, led by UCO Bank, IOB, Union Bank, Bank of India. These were some of the counters up anywhere between 6 to 10%, and then metals also shown in the trading session, led by Adani Enterprises, which was up 9%. and even Welspun Corp, JSW Steel, these were some of your other gainers. From the auto space, TVS Motors had a solid run of 4.5%. Bajaj Auto we were expecting on that JP Morgan upgrade, but TVS Motors definitely is something that is catching attention, and Eicher Motors too did well. From the FMCG pack, it was HUL that was doing quite well for itself, so that's another name to watch out for. But separately, India Cements, Balrampur Chini, Dalmia Bharat, AB Capital, these were some of your top gainers. And on the losing side, not many names to be honest, but then there is a Whirlpool which is down 2.25%. Marico is down in the trading session. Glenmark, UPL, Canton Homes, these were some of your top lagouts for the trading session. But it's a monthly options expiry. For the week as a whole, it's still been down and out because we're down a good 2% after the 1% gain that we have today as well. So for the month of March, we continue to track losses, but not a bad closing coming in ahead of it being a truncated week. So 17,117 is where we are shutting shop, while the Sensex is up a solid 0.8%. Well, as we wind down on this edition of Closing Trades, let me get you something for our viewers as well. A day after Namibian cheetah Shasha's death inside Kuno National Park in Madhya Pradesh, there's some good news. Government has shared a video of 4 cubs born to one of the cheetahs translocated to India in September last year. Union Minister for Environment Bhupendra Yadav lauded the team for Project Cheetah for their relentless efforts in bringing back cheetahs to India and correcting an ecological wrong done in the past. He commented in a series of tweets.